and a very warm welcome to this first ever ECB Listens event with civil society organisations. My name is Jackie Davis. I'll have the privilege of moderating our discussions today, and we are delighted to have so many of you with us for this conversation between a host of civil society representatives and ECB President Christine Lagarde and Chief Economist Philip Lane, who are here to listen to what you have to say on behalf of the entire executive board of the ECB, who are listening to our discussions. A warm welcome also to those of you who are watching us via live web streaming. Good to have you with us as well. As the title of this event implies, the aim today is for the ECB to hear your views. To this end, our discussions this morning will be entirely interactive, a genuine conversation in which you will all have the chance to contribute your views and comments. I'll tell you more about how that's all going to work a little bit later on. But before we dive in to those discussions, let me first turn to President Lagarde and Mr. Lane. A very warm welcome to both of you. Thank you for hosting this event today. I just wanted to ask you a couple of questions to give us a better sense of why we're here today. So President Lagarde, if I could turn to you first, the ECB is currently reviewing its strategy. Could you just explain why you're conducting this review and why you wanted to listen to civil society organisations as part of this process?
Well, good morning, Jackie. Very nice to see you, and good morning to all of you who are joining this event. The reason, Jackie, we want to open the dialogue as much as we can and to hear the voices of civil society organizations, non-governmental organizations of all sorts, is to make sure that we have that in our strategy review loop. And this is so because simply the euro is the common currency of all citizens of the euro area. It is their common good, and we are the custodians of that common good. The European Central Bank is at the service of the European citizens, and as a result of that, clearly, we have to make sure that what we do, which is set very precisely by the treaty under which we operate, actually corresponds to what is understood, what is expected by the European citizens. And we not only do that with civil society, we also do that with members of parliament, and we have had those discussions. We will continue to have the discussions. So we try to be as encompassing as we can in conducting this exercise, and it's highly, highly valued.
Thank you. Thank you very much for that. And Mr. Lane, if I could ask you, what do you hope that you're going to learn from our participants here today?
Well, good morning to everyone. I mean, from my point of view as the chief economist, one of the big lessons in economics in the last 25 years since the euro was founded is it is so important that the public understands the central bank and that the central bank understands the public, because a lot of how monetary policy works is by convincing households, convincing firms about the future direction of the economy and so on. And it's really, and equally for us to calibrate what we do have to understand the beliefs, the confidence level, the uncertainties, the fears of individual households, of firms. So I think that this type of dialogue is, if you like, I think quite overdue, because I do think it's a very direct way to advance on that agenda. I mean, there's no way for all of the groups involved in today's event, really, there's no way except through direct interaction with the ECB, with us, really, I think, to have a good understanding. I know I don't understand other actors, if you like, unless I have the opportunity every so often to have a direct interaction, a direct interchange.
Thank you, sir. And finally, President Lagarde, you've both underlined just how important this event is as part of your listening exercise. What will you do with what you hear today?
Well, first of all, we will listen. That's number one. Number two, we will bottle in the comments, the views, the expectations, the frustrations, the desire of those who will take the floor and will tell us how they see it and how they perceive our action and how they understand stability of prices, for instance. And we will loop that into the strategy review so that when we conduct with the Governing Council members and with the entire Eurosystem, we conduct the strategy review exercise, which will have its own sequences, some of which have already taken place. Those views are taken on board and factored into the final decisions that will be made at the end of the process.
So thank you very much for that, underlining just how important this is and why it's so good to have so many of you on board with us. Just let me explain a little bit more about how this morning's going to work. We're going to focus on two topics that are at the centre of the strategy view, monetary policy and communication, and then global challenges. How it's going to work is I'm going to start each topic session, as it were, by having a brief chat with either the President or Mr. Lane about the issue, just to give us a little context for our discussion. I'll then open up to all the civil society representatives who are here with us today to hear your views on the topic, as I underlined, and come back from time to time to the President, to Mr. Lane, to react to what you are saying. I have only one objective for this event, which is to give as many of you as possible the chance to speak and ensure we have a real conversation. To that end, I have only one house rule. I would like to ask you, please, to stick to 1-2 minutes for your comments and to forgive me if I gently, I hope, but also somewhat firmly remind you when your time is up. As I say, imperative that we give you all a chance to speak. A final housekeeping point, just to remind our civil society representatives, if you want to speak, click on the raised hand button in the bottom right-hand corner to raise your hand electronically. When I give you the floor, I'll ask you to activate your own camera and mic and lower your hand after you have delivered your intervention. And one final point to those of you watching via live web streaming, your input really matters too. You can go to the ECB Listens portal on the ECB website and let us know what you think about the issues we're discussing. We won't be able to take those comments into our conversation today, but rest assured that they will be part of the summary report of views which are being collected, as the President explained right at the beginning, right across the euro area from all sorts of different sectors of society. So that's how it works. Let's get underway. And in this first session, we want to hear your views on the economic environment in which monetary policy is conducted. Before I come out to all of you, Mr. Lane, can you just clarify something? The ECB's primary mandate is to ensure price stability. Can you explain to us what is meant by price stability and why it matters so much, and what you're actually looking at as part of the review?
Okay, I mean that goes to the centre of our work here, and at one level, you might say, surely this is obvious. Surely I know it when I see it. And I think for many people that's true, is they know when price stability is absent. So in the 1970s, 1980s, for example, before the euro was created, inflation rates were much higher than today. And that did damage the economy. If firms, households, governments have to worry and manage and stress about excessively high inflation, that is a failure. But equally, and this is a lesson from centuries of experience, because the 19th century, for example, had this issue every so often, and also more recently, is deflation. So when we have year after year prices falling, that's also destabilizing. It's destabilizing for managing investment, managing consumption, managing the financial system. So we know the absence of price stability is very damaging. So then how do you find a sweet spot? The sweet spot, we think, is low inflation, but significantly with a significant enough buffer above zero that we do make sure we don't fall into deflation. And if we hit that sweet spot, which, by the way, has been in our strategy since 2003, where we say we want to be close to 2%, below but close to 2%. That's our current framework. And I think part of the review will be, is that exact expression of where we want to be remaining the best we can pick? But broadly, the spirit remains. It's a bad idea to have inflation drifting upwards, but it's also a very bad idea for inflation to go negative on a persistent basis. So, it's not so easy, and maybe we'll come back later on. But let me also emphasize the most common misinterpretation we hear sometimes is people assume in a world where inflation goes up, they also assume that wages will not keep pace. But by and large, when we say inflation at 2%, by and large, that also means earnings we expect to rise at 2% and above 2%, by the way. So it's not the case that inflation, if well managed, is going to harm living standards. It's only badly managed inflation will harm living standards. But if the economy is like a well-oiled machine, prices going up at 2, wages going up at 2 and plus productivity, so there's some increase above 2, that should be a well-oiled machine, and that's a lot easier and a lot more stable than either an economy with too high inflation or an economy running at the risk of deflation.
So, as you say, how to find that sweet spot that makes the well-oiled machine work as effectively as possible and deliver for our economy and society. So that's what we're talking about here. I'm going to open up to the floor. Can you start, if you want to take the floor on this topic, please, to raise your hands. And I just wanted to throw some questions at you, really, to hear your views. What are your hopes and concerns for the European economy? Philip Lane was explaining there why price stability matters so much. What impact do changes in price levels have on you, on your organisation, the people you either represent or serve through your work? How are you affected by low interest rates? And perhaps towards the end of our conversation, I'm wondering, do you have any advice for the ECB on how to better engage and communicate with you? Because, as the President said at the beginning, that is absolutely essential. We want to understand and we want to know what your expectations are, and we want to communicate with you better. So in each session, we've asked someone to act as, if I can call it this, an icebreaker, just to get us started, and then I will come to the rest of you. Our icebreaker in this session, I'm delighted to welcome Marcus Behrer, who is Director General of Business Europe. Marcus, very warm welcome. You have the floor, just a couple of minutes, if you would, please. Over to you. Can you activate your camera and your mic, Marcus?
I hope it works. Good morning, Jackie. Do you hear me?
Yeah, we can hear you beautifully, sir.
Very well. So good morning. Thanks. And I would like to thank the ECB and President Lagarde for the opportunity. Number one, we think this is a very important exercise. First, price stability. Obviously, predictable conditions are key for companies, and stable prices are very much part of it. And we greatly appreciate what the ECB has been doing in the last 20 years. Because before the introduction of the euro, we have seen, of course, high and often unstable inflation in many member states. And of course, I mean, this was pushing investment decisions down. But in our days, and it has been mentioned by Mr. Lane, of course, ultra low inflation is more of a concern because this is complicating wage negotiations, especially in a market like the European one, where the flexibility of labor markets is lower than it would be in other markets. And it's, of course, also risking to damage consumer confidence and spending. So we hope that the European Central Bank will continue to develop its monetary policy toolbox in order to be up to this challenge. On the expectations, well, of course, I mean, we all see the risk of a permanent scarring of our economy, especially if more workers become unemployed and more companies go bankrupt than absolutely necessary. And of course, these deflationary risks we see at the time being, there is deflationary risks if we would see a permanent purchase power reduction of households. And we also see a risk that this could impact the monetary policy transmission mechanisms if companies would borrow less in the medium run and if banks would deleverage. Let me say one thing on the purchase, on the asset purchase programs, which we very much support. But we also think that the ECB should, in this respect, maintain market neutrality. So what do I mean? For instance, we very much support the Green Deal and climate neutrality, but we don't think that the ECB should go outside of its role and of what is defined in the treaty. So we think, of course, green assets should be eligible, but at normal terms. We don't think that the ECB should prioritize certain assets over others. One thing we very much support the ECB is that the call on member states to also do their part and not leave it to monetary policy exclusively. We think this is key, and we also think that the money raised now, which should help us to avoid permanent scarring of our economies, the money raised in the Next Generation EU mechanism needs to be well spent. And in private business terms, I would say we need to improve Europe's earning capacity. Two more sentences, Jackie. Beyond fiscal policy, we also think we need to be careful in the implementation of Basel 3.5. And before implementing, we need to reassess whether the scenario and the market's needs have not changed. And last sentence on communication, we think this is a great exercise, and we in particular value the macroeconomic dialogue on European level, the dialogue with the social partners, and specifically ECB's commitment and also President Lagarde readiness to join these important exchanges. Thank you very much.
Thank you very much indeed, Markus. And your second point relating to market neutrality in the asset purchase programs, I'd like to park for now, if I might, because that's what we're going to focus on in our second session. But we can hopefully pick up on some of those other comments a little bit later on. I'm going to turn now to Wolfgang Kuhn, who is from Share Action. Wolfgang Kuhn, you have the floor. Can you activate your mic, please? And your camera, so we can see you if at all possible. There you are, sir. Good morning.
Good morning, Wolfgang. For Share Action. Thank you for listening. We believe that the ECB needs to take side effects of monetary action more seriously than it has in the past, when the message has always been, we got it covered next. We believe the ECB's credibility is at stake regarding the mandates, not from the people who watch five-year forward inflation swaps, who bet on harmonized consumer price indices, but from people who see the value of their money eroded in the name of inflation fighting, as Mr. Lane has mapped out, from people who have to save money in order to buy things. Orthodox arguments that asset price inflation is irrelevant to price stability sounds grotesque to people who are forced to save at negative rates to come up with an ever bigger deposit to buy a first home. Arguments that negative rates are great to deflate debt is meaningless to someone who has to pay credit card rates. But credibility is also at stake, we think, about allowing free markets, specifically allowing the market to price credit risk. We talk a lot about market neutrality, but the fact is credit spreads are seriously distorted, whether you do the intervention in a market neutral or non-neutral way. Now, Share Action's mission is to get institutional investors to take systemic risk seriously, and that job is made very hard when investors have learned to expect an ECB-induced recompression of credit spreads whenever something bad happens that is not idiosyncratic. Issuers, on the other hand, have learned that markets will be kept open to them, no matter what sector they are in. In that context, I'd like to suggest that the ECB may publish how many hours the ECB executive board members spend with representatives of the financial industry and trade bodies versus how much time they spend with consumer and climate advocates. Thank you very much for listening.
Thank you very much indeed, Wolfgang. I'm seeing a couple of names coming up. We're going to take, in a moment, I'm going to take Stanislas Jordan from Positive Money Europe, and then I will take Thierry Philipponin from Finance Watch. Could I urge also those of you not from the finance world also to join our discussion? We want to hear about your concerns and what you see in terms of developments in the European economy and how it's impacting on you and your organizations. But let us turn first, if we could, to Stanislas Jordan. Stanislas, can you put your... Very good. I can see you beautifully.
Excellent. Good morning, and thank you very much for inviting me to this event. Positive Money Europe is an organization, a civil society movement that works to make central banks support a fair, democratic, and sustainable economy. But let me go straight to my point. We think the European Central Bank is facing a profound questioning of both its role in the economy and how it's working. As external observers, we are truly concerned that old-fashioned central bank thinking and theory does not seem to be working anymore in this new world. And the COVID-19 crisis is just exacerbating uncertainty and this paradigm shift. The ECB has failed at achieving its inflation mandate for the past 6 years, which really questions the robustness of the economic theory and models it relies upon. So we think the strategic review offers an opportunity to explore ways of better achieving its mandate. We agreed with how Philippe Lane has presented the price stability justification, but in our view, it really doesn't matter what price level you're targeting if you don't have the right tools to achieve that. So we think the ECB must add quality to quantity. Currently, the ECB is really using very blunt tools, such as quantitative easing, whereby the ECB injects trillions in euros in financial markets, hoping that banks will in turn do their role. But this isn't really working. Those programs seem rather ineffective in proportion to the size. How does a reduction in the yields by 20 or 40 basis points, how does really matter given the gigantic size of your programs? And how about the fact that the liquidity provided by the ECB often ends up subsidizing fossil fuel companies or support share buybacks operations by multinationals and generally boosting equity prices to the benefit of the 1%? Is this really the best way to conduct policies? So instead of creating always more money, we would really like to see the ECB looking at the quality of the financial flows that the ECB policies are generating directly or indirectly. And also we'd like to have a debate on, is this really necessary for the ECB to always walk through banks and financial institutions? Isn't there not a way for the ECB to circumvent that, to go directly to people? And I'm obviously referencing the idea that we have been campaigning for 5 years, the quantitative easing for people or helicopter money nation. And let me just end by saying I think it's really shocking that ECB does not seriously look at this, while the whole world is seriously debating in the media, and the ECB has not even published even one research paper on this. So I think I would really like to know what the ECB is doing to look at ways to better improve the quality of the policies and find a way to not rely always on financial markets.
Thank you very much indeed. Thank you, Stanislas. And as I said, I'm now going to go to Thierry Philippon now from Finance Watch, and then I'll take one more financial institution. I'll take Guillaume Prasch, and then I'll move to Martin Smaltsried and Michael van Kolten. But let's go first to Thierry. Thierry, can you put your mic on and your camera, sir?
Can you hear me?
I can hear you beautifully. We can't see you at the moment, but hopefully we will in a moment. But
Here we go.
Here we go.
You will see me now.
That's marvelous. Good morning, sir. Over to you.
Good morning, everybody, and thank you very much for organizing this listening exercise. Thank you very much to President Lagarde and Mr. Lane. This is very, very important exercise up here. I will stick to the to the price stability issue that we're addressing in this session. The question I have is really about the transmission mechanism that operates when you intervene with the objective of keeping prices between 0 and plus 2%, really. It strikes me that I was listening to Jean-Claude Trichet recently, who very interestingly said that when he was president of the ECB, they reached the target of plus 2%, less little something each year, year after year. And he was not taking pride of that. He was saying that at the time it was possible to do it. It strikes me that under President Draghi or under you, President Lagarde, the situation is much more difficult. I don't even mean it. It's because you're doing less good a job than Jean-Claude Trichet was doing. But the context has changed. And I have two questions for you. The first question is, don't you think the transmission mechanism by which your operations influence the economy has, if not broken down, at least being much less efficient? And what I mean by that is that effectively you inject liquidity to financial institutions, and financial institutions provide less and less support to the real economy. And if you don't provide support to the real economy, by definition, your action is not going to reach the real economy and therefore will have less impact on prices. So I would like to reflect with you, and that's certainly something we've been pushing and saying at Finance Watch, on whether the structure of the financial system could not be a hindrance to your price stability policy.
Thank you.
In particular, and I'll finish here,
Very briefly, please.
in the context of a depressed aggregate demand following the current situation and obviously the COVID situation. Thank you very much.
Thank you very much. Let's turn now to Guillaume Prache. Guillaume Prache from Better Finance. Guillaume, can you put your mic and your camera on, sir?
Yes, do you
There
hear
we
me?
are. I can hear you beautifully and see you beautifully. Over to you.
Great. First, I would like also to thank very much the European Central Bank for this initiative to reach out to EU citizens as users of financial services and to civil society at large. It's indeed extremely important. We do support price stability for EU citizens and consumers especially, but the way the ECB has been doing it is leading the charge of an unprecedented financial repression. As you know, this term was invented by Stanford economists years ago. Financial repression comprises policies that results in savers earning returns below the rate of inflation. Now it's even worse because the returns become negative. And we are concerned indeed that the ECB deliberately favors short-term financial support to banks and governments over saver protection. I heard the chief economist mention the 2% inflation. May I remind you that over 40 years, when you are guaranteed a nominal pension, it means you have lost 55% of the real value of your pension just with 2% inflation over 40 years. That is exploiting one of the biggest behavioral biases of the people, which is monetary illusion. And it is not only a social and economic issue, I want to stress that is very important, Jackie, it is also a democratic issue. We all have memories of our history of the 1930s, and financial repression is sacrificing the most worthy middle classes. And the middle classes are the main pillar of democracy. Sacrificing them is likely to lead again to the rise of anti-democratic forces, violence, and misery. I'd like also to speak about the way it's done with banks, but maybe I will have another opportunity, I hope.
In this session, probably not. I'm going to try and give everybody at least one shot in this part. Yes, on global challenges, you can come back. So, Guillaume, if you briefly want to make your point, please do it now.
Okay, thank you very much. Yeah, the way it is done, one of the main ways is now to de facto subsidize banks, because when you provide negative interest for bank borrowing money to the ECB, it means you give a subsidy. We will really want to know what are the amounts of these subsidies, the total, and by bank beneficiaries. And we ask also, it's the unique example of a subsidy where there is no counterparty asked by the public authority. Where is the ethical basis of this? Thank you.
Thank you very much. And could I just say, when you have given your intervention, it'd be very helpful to us if you could lower your own hand as you turn your camera and mic off. Thank you very much, Guillaume, responding immediately. Thank you so much for that. I'm going to take a couple more. I'm only seeing a couple of hands up more for the moment. Then I'll come back to the President and Mr. Lane to react to what we've heard so far, and then we will take another round from the floor. But let me turn first to Martin Schmalzried, who is from the Confederation of Family Organisations in the European Union, COFACE Families Europe. Martin, great to have you with us. Can you put your mic and your camera on, please, sir?
Yes, I hope you hear me. Yeah, great.
Perfect.
So thank you for this meeting and for giving us the opportunity to speak. COFACE Families Europe is a European NGO. We represent the interests of families, and our main area of focus is social policy, gender equality, non-discrimination, poverty. But the more narrow focus, which brings us to this table, is financial inclusion, making sure that all families have access to affordable, accessible, and quality financial services. And as a civil society organization, we often face the same arguments when we face policymakers. It's who will pay for these measures? There's no money. This prompted us to dive deeper into understanding macroeconomics and monetary policy. And examining the role that the ECB plays in all of this. And our recommendations in that regard can be broken down into two categories. Plan A, which is recommendations to solve the problems within the current system, and Plan B, recommendations considering alternative debt systems to a debt-based monetary system. Now, the Plan A is, many recommendations led us to consider the work of Kate Raworth and her donut economics model, for instance, and are aligned with what you'll hear from other NGOs and civil society organizations today. However, we believe that some of our organizations believe that these do not address the major shortcomings of a debt-based monetary system. And with this regard, the ECB's role, even if this consultation shows a willingness to engage in a bottom-up dialogue, policy tools at its disposal are invariably top-down, and in the sense that any new monetary program, be it quantitative easing or future ones, has to trickle down through a number of institutional layers before hopefully reaching the real economy and people. So it's equivalent to trying to replenish the ocean by dumping water on the top of Mount Everest. It's very likely it will freeze on top of it, get stuck in a dam, diverted by various irrigation systems before it reaches the ocean, and by then it might be too late. So this echoes your call on member states just a few days ago to distribute the 750 billion without delay. Now, unfortunately, these programs have sparked something like the everything bubble. That's what many economists say, increases the price of assets, which increases inequality because it benefits mostly the rich people. And with regards to communications, because you were talking about that, we believe that ultimately it's more like a psychological game that you're playing to ensure that people continue to consume and borrow steadily to prevent this debt-based system to implode. So your strategy of injecting this extra liquidity, as being said, it takes the form of debt invariably, which means the burden of restarting the economy is always on small and medium-sized enterprises and people that have to bear the risk for jump-starting this deflated economy. And if it fails, then they're in over-indebtedness. So hopefully that's why we're switching to Plan B also and considering Plan B recommendations. And in this regard, we have started exploring the potential of alternative solutions such as universal basic income or the relative theory of money by French economists Stéphane Laborde and others. And we need a new monetary system which is bottom-up, truly democratic, and where citizens are at the heart of monetary creation, which is resilient to shocks, can tolerate fluctuating demand, and is not dependent on growth, and nevertheless fulfills the essential mandate of the ECB of price stability. So to finish, my question to you is, have you heard of such alternative monetary theories? And if not, would you be interested in an open dialogue on the pros and cons and feasibilities of such options? So we look forward to working with you on the strategic review of the ECB's mandate in order to ensure that the economy is at the service of society. Thank you very much.
Thank you very much indeed, and great to hear from the social sector. We have a number of other civil society organisations from that area. If you want to intervene in the second round, please begin to indicate now. We haven't heard yet in this part from any of our environmental NGOs, or indeed we have some democracy NGOs here. We'd be great to hear from you. But let's take one more in this round. Michael van Houten from Transparency International. Michael, good to have you with us, sir. Can you activate your camera and mic?
Thank you, Jackie. Great to see you. And thank you for this opportunity to make a contribution here on behalf of Transparency International. We welcome this initiative and the new spirit of openness that the ECB has displayed since President Lagarde took over. She said in a speech last month, we must explain much better to the general public what we are doing and why. And this is true, but it's not just about explaining, it's also about being transparent in every facet of the ECB's work to ensure that the public can scrutinize the bank's activities and how it arrives at its decisions, as well as understanding them. And that's especially important for the ECB because it's independent and therefore outside of the regular decision-making framework. And we believe that the difficulty of organizing full accountability needs to be compensated with efforts across the board to ensure a high degree of transparency. There is a widespread and legitimate concern that by gradually expanding the scope of its activities, the ECB has sometimes let politicians off the hook. Every time the ECB tests the limits of its mandate and parliaments don't have a say, EU democracy dies a little. And we also need to look at the way the ECB operates internally, because that impacts the way decisions are arrived at and communicated. We published a report 3 years ago in which we called for the ECB to improve its internal integrity mechanisms. Many of those recommendations have been acted on, which is great. But there's one area I would like to highlight that is still in need of urgent action, and that's the protection afforded to whistleblowers, which doesn't compare well to international best practice. As we've seen on many occasions in recent years, both in the EU and elsewhere, whistleblowers play a critical role in exposing wrongdoing within institutions, and as such, they should receive all possible protection. The ECB has been working on a framework for whistleblower protection for several years. And last year, the Governing Council broadened the scope of the Audit Committee's mandate to specifically look at this. I would like to know from the President and the ECB whether you can update us on where things stand in relation to this work at the moment, and whether you will commit to ensuring a full level of protection in line with the EU Whistleblower Directive. Thank you.
Thank you very much indeed, Michael, and don't forget to lower your hand. Madam President and Mr. Lane, a range of comments there, some going from the very fundamental about your approach, your role in the economy, through to some advice on communication. You asked for it, but also underlining communication is about transparency as well as explaining. Please, President Lagarde, your comments, reactions to what you've heard so far. And as I say, if you do have a question and you haven't put it yet, I'd love also to hear from some of our youth groups, some of our business representatives. We have people from culture and from Oxfam. Please do join in the discussion. But sorry, President Lagarde, your reaction to what you've heard so far.
Jackie, my first reaction is thank you. Because it's your comments, your questions, your views are not necessarily comfortable. And some of them are a little bit out of the beaten track and outside the box in many ways. And that's the whole beauty of this exercise, because we don't want to shy away from some of them. We don't want to be prisoner of any particular doctrine. We want to hear all voices. Doesn't mean that all of you are going to be satisfied with the outcome, because it might be different from what you have in mind. I just want to pick up on one particular issue, which is the last question that was asked, and then I'll defer to Philip, who's been working so hard on many of the issues that you've raised. The issue of the whistle-blowing mechanism, and which really touches on key issues such as transparency, accountability, responsibility. I'm really happy that you asked that question, because I have the answer. In a few days, actually on October 21st, which I believe is tomorrow, or is it today? It's today, actually. Oh my gosh. So I'm taking a little bit of air out of the announcement that is due later on today, because today is Ethics Day, and we are actually announcing our whistle-blowing procedure, which is in line with the European directive, which includes a very solid protection against retaliation, and which will really put the institution on a par with those that take responsibility, transparency, and accountability seriously, including internally, so that we can practice what we preach, and that will actually go live with appropriate technical platform, protection of anonymity of the whistleblower in order to make sure that protection is guaranteed on October 28. So, out today.
Thank you very much. Breaking news. You heard it here first. Mr. Lane, your reaction to the mainly comments, but also some questions in there.
Sure. So let me start by emphasising that the European Treaty gives us a very general obligation. It is basically to deliver price stability. It's silent on the condition of the world. It's silent on the structure of the economy. So like any constitution, any treaty, what that means today compared to 25 years ago is going to be different. What it means today compared to 15 years ago is going to be different. So one of the, I think, interesting attributes of this kind of event, where we are bringing the different representative groups together, it's also an opportunity for everyone to listen to each other. So it's not just bilateral with us. I mean, we do have bilateral engagement with many groups, but I think this kind of collective format is also helpful because, as all of us are listening to each other, you can see some of the classic issues that relate to central banking and monetary policy. Let me, again, this is not a day to give definitive answers, but let me highlight a few of the issues that we are thinking about and which I think are consistent with some of the views that have been brought up. Number one is a big fundamental, and it's global. It is not a European issue. It's a global issue, which is the world is changing in terms of demography, technology, productivity, and also, let me especially mention digitalization. So what it looks like around the world is the economies need low interest rates in order to operate. Essentially, there's a lot of desire to save, and there's a less desire to invest. And when you have those two forces coming together, what it means is the interest rate all economies are facing is a lot lower than it used to be. So people who are arguing that it's uniquely the ECB's choice about the interest rate, I think need to reflect on this basic point, is there's a global structural force there, which means if we try to resist that, if we try to raise interest rates without factoring in that reality, I think we would have to face a situation with more unemployment, a kind of worse performing economy. A second point, but it's connected, is many people on the call so far have emphasized, why are we so dependent on intermediation through the financial system? Why don't we deal directly with the real economy? And by the way, I'm pretty sure after the global financial crisis of 2008, that critique has really been reinforced. I think we have to listen to that. I mean, I think all central banks have a basic, and part of that is in the underlying legal framework about what kind of operations we can do. But in the end, I suppose I'm going to, be sympathetic to the idea that we do have to think about changing technology. We do have to think about the way the financial system itself is changing over time. Let me emphasize, however, that some of the comments, please remember, those of you who do follow the financial system, it's not the case the financial system is loving the ECB. You know that the banks, there's been a big critique from the banking system about our low interest rate policy. So it's not the case that I think there's a clear hierarchy where the financial system thinks the central bank is doing well, the real economy does not. And maybe the other point I think about the real economy is what we've learned in the recent years is our monetary policy has helped activity. Employment has improved. There has been a recovery, a muted, but a visible recovery before this pandemic. What's less true is how that recovery has converted into inflation. But the idea that our monetary policy is not passing to the real economy in the sense of more employment, more business activity, that we think is going on. But it's the next step to inflation is less powerful than before, maybe.
Okay. Shall we take a few more, and then I'll give you another chance to respond before the end of the session on this topic, and before we move to our next topic. I'd like to turn first to Roger Casal from New Europeans, and then after that I'm going to give the floor to Robert Manchin from Culture Action Europe. Roger, you have the floor. If you could activate your camera and your mic, sir.
Thank you very much indeed.
Can hear you beautifully, but there we are. Yes, I can see you.
Thank you, Jackie. So Roger Casali, New Europeans, a pan-European civil rights movement. Thank you very much indeed to President Lagarde and her colleagues for this opportunity, and also, if I may say so, for her commitment to this dialogue. I do think that you really get it, and that's important, and we want to help to spread that message around, because you understand that Europe is not just a union of nations and states and markets and money, but it is also a union of the citizens, and that the citizens and civil society, and in particular what's happening in many cities across Europe, is a tremendous resource in terms of answering the question what we do next. And that would be important even if we didn't have a pandemic crisis, which we do, and we know that in every crisis there is an opportunity, and it's important that we seize the opportunity and that the new opportunities win through, and that the crisis doesn't dominate. And just very briefly on the three questions that you've asked, price stability, of course, is very important to all of us in civil society. It's part of our risk analysis, but that also incorporates stability of incomes. We're also concerned about incomes, and we're concerned about our well-being, our mental, emotional, and psychological well-being. And I think that in the context of the crisis, we need to see these three things together. And of course, price stability is also a question of what kind of prices we're talking about within the basket of prices. Rent, energy costs in particular. It could be that prices are relatively stable, but some prices within that impact very strongly on civil society are not, and therefore it's important to talk to civil society and people in civil society to understand how people are thinking. In terms of our economic expectations, hopefully we all want the same thing. We all want a green, healthy, dynamic Europe. And I think, again, citizens are the key to the recovery and to getting consensus behind a strategy for the recovery. And finally, on your question about how we can better communicate, this is a very important first step. Again, thank you very much for making us part of this conversation. We will do whatever we can to widen the conversation. We don't want a privileged seat at the table. We want to be helpful. We want to know what more we can do to broaden out this conversation and make it more inclusive, and what other steps you can take to drill into the huge resource that is civil society, to mine the experience of ordinary people to drive the strategy for the European recovery. Thank you.
Thank you very much, Roger. And that gives me an opportunity also to remind those of you watching via web stream, please do use the ECB Listens portal to give your views as well. I see one more on this topic. So if there are no more after that, I'm going to go back to the President, Mr. Lane, and then we'll move to our second topic. But Robert Manchin from Culture Action Europe. Good to have you with us, Robert. Your comments or thoughts? Can you...
Yes, thank you very much.
I hear you and I can see you. Marvelous.
Thank you, and thank you for the invitation. I think this is a historic first that the cultural sector is also invited for such a wide-ranging European issue, and especially for the European Central Bank. So let me just relate more to the communication aspect. That I think we are in a very general shift in terms of the overall cultural climate in Europe. It's an age of uncertainty where old models are not working anymore, and I think we have to be also taking a step back. And when we are talking about price stability only, we forget that the ECB, as far as I know, have a much wider mandate to support general economic policies of the European Union. And there is even a reference to Article 3 of the treaty that calls for full employment, for improvement of the quality of the environment, economic and social cohesion, social justice and protection. And we hear very little from the European Central Bank among those. So I understand that the main concern is price stability, but I think in the communication, the bank should really expand and reach beyond that core message in order to understand why price stability, because it has to really serve the well-being of the whole population. And in this one, I think that there are changes. We hear very good little bits of communications on a change of supporting climate change, sustainability, and that is also a core mission could be. And in this cultural shift, I think when we are as cultural actors try to be participants, that would be the biggest help for us if ECB is shifting a little bit and broadening the communication concerns. Thank you.
Thank you very much. I see another hand has come up in the meantime. Robert, if you could lower your hand, and I'd like to give the floor to Alessia Del Vasto. Alessia, you have the floor for your comment or indeed your question.
Hello, hi.
Hello there.
Hi, wanted to add some more words on communication from Passive Money Europe. So the ECB is facing a narrative crisis. The ECB was made independent and technocratic so that it could focus on a single narrow objective without being subject to political interference. And people can understand the principle of separation of power, which underpins central bank independence. And money creation is such a powerful tool, it does make sense to entrust it to a safeguarded institution. But today, central bank independence is often used as an excuse for inaction. And this could almost be regarded as awkward, given the fact that structurally low inflation means central banks can intervene more with a very low risk of prejudicing their primary mandate. And this is why people are starting to wonder, why should central banks remain independent if they're not willing to use their independent powers for the greater good of societies, such as tackling climate change or inequality? Thank you very much.
Thank you very much indeed, Alessia. I don't see any more hands up in this topic, so let me come back. President Lagarde, a lot of comments there about communication, a lot really echoing what you were saying about, monetary policy needs to have the support, the understanding of the public if it is to be credible. Your reactions to what you've heard then, Mr. Lane, and then we'll move to our second topic.
Thank you very much, Jackie. Just very briefly on one of the questions that was asked last. I did not catch your name, but you represent the cultural sector. I would like to just... Okay, yeah. Thank you for your question. And thank you for the background. Your carpet behind you was just spectacular. Three things about that. Number one, cultural activities can be an incredibly powerful media for monetary policy. You might find that a little bit shocking and surprising, but if you care to look on YouTube, what the National Central Bank of Jamaica has done in order to explain what inflation is about and how it has used reggae music to actually convey those messages, it is really a case in point. Second, cultural activities are an enormous economic sector of our societies. And we are seeing it now as we are navigating through this storm of COVID-19, where a lot of cultural activities are on hold and a lot of cultural actors of all sorts are by the sideline and without much support, which is a real concern. And third, it's critically important because it's the glue that keeps us together. And I'm so pleased that you are participating in the event and that we can hear your voice and your concern. The issue of price stability is important for us all, whatever sectors, whatever position, whatever function we have in society. And it's a fact that whether it's inflation that hurts most the poor and the most vulnerable people, or whether it's deflation because it's going to defer activity and postpone what we observe as producing employment, such as growth. I know some of you don't always like growth, but we don't know at the moment of a system that is going to pull us out of the current situation other than that. So thank you for your question. And by the way, the ECB is also active in cultural affairs, probably a bit too much in Frankfurt as far as the ECB itself is concerned. But the ECB is part of a euro system. And just as there are lots of national central banks of the euro system that have ECB Listens events as we speak and in the next few weeks, they also have a lot of cultural activities and they will continue to do so.
Thank you very much. Mr. Lane, anything to add at this point?
Well, maybe just to emphasize to everyone, maybe again, one of the big changes in how economics is done these days, and again, because of more computer power, more data, is to allow for the fact, as is I think very clear from this meeting so far, is that the economy and society is incredibly complex. We no longer need to assume all households are similar. We can allow for the fact across Europe, we do have those in the demographic and those with high enough incomes to be significant savers. We have many people who have very low or zero financial assets, so the issue of financial inclusion is there. And we have many people, again, in the position where they have mortgages and debt and so on. So all of that variety is very much factored into the way we think about the economy these days. So maybe a preliminary message I'm gathering from this is in communication, we have to recognise those who are listening on one topic may not be those who are going to listen on another topic. and maybe we need to tailor and nuance our messages because of the fact the concerns are so different across different groups. So maybe, and then maybe the other thing is, historically, sometimes there's more of a conflict maybe between the policy needed to control inflation and the policies to support the economy. Under the current conditions, maybe that conflict is a lot less, because by and large, the policies that are good for improving the inflation performance will be supportive of employment and general economic activity. So I think there's still some conflicts, but let's not forget that a lot of the time, what we need to do for the inflation objective also is supporting the secondary objectives.
Thank you very much indeed. So we're going to move now, because I don't see any more hands up on that topic. We're going to move to our second topic today, and we're talking about global challenges here. And I want to link this really to something that Philip Lane said a while ago when he said the treaty gives us the mandate to ensure price stability, but it's silent on the condition of the world, and what that means today might be very different to 15 years ago. Hence this strategy review, the first since 2003. So here we want to focus on those global challenges and how they're influencing monetary policy decisions. And just if President Lagarde, if I could come to you first. The treaty makes it clear that without prejudice to this objective of price stability, the ECB shall, and I quote, also support the general economic policies in the Union with a view to the achievement of the objectives of the Union. You in the ECB talk about secondary objectives. What does that actually mean? What are secondary objectives, and how do you do this now? How do you take them into account now, for example, in areas already mentioned in the first panel, like climate change and environmental stability? What are we talking about here?
Well, thank you so much, Jackie, for putting the debate, or the heart of the debate right on the table now, because I was about to read extract of the treaty to actually start with explaining that. So you put it rightly, we have a primary objective, we have a primary mandate, and it's a mandate that was set by the treaties, by the founding fathers and mothers of the European Union, and particularly in relation to the ECB, which is very clear and which we are not proposing to change because we are mindful of the feasibility of whatever we are reviewing. And that treaty says very clearly, primary mandate, price stability. How we measure price stability, how we deliver on our mandate, those are things that are left quiet in the treaty. And then the treaty in the same section continues to refer, and it prefaces that with, without prejudice to the primary mandate, and I will refer to exactly the words. So without prejudice to the objective of price stability, the ECB shall also support the general economic policies in the Union with a view to contributing to the achievement of the objectives of the Union. Okay? And obviously the reason we have not invented the secondary objective, it's clearly a result of lots of legal debates that have taken place that actually try to define what is meant by without prejudice to. So the first thing that we have to pursue, which is our primary mandate, is price stability. Provided that we achieve that, then we can look at what has then been referred as the secondary objectives. That's one interpretation. There are multiple other interpretations as well, by the way, of this combination of primary and secondary, how they are articulated together. But, and it goes to the second point that I would like to make. So we have primary, we have secondary. I think that one of the discussions that we will have as part of the strategy review, particularly when we look at some of the externalities that are not necessarily embedded into the price of goods and services that we consume, is whether or not those externalities have an impact on price stability, which is our primary mandate. In other words, there are some people who will say, well, you have to look at environmental issues, you have to look at distributional impact, you have to look at inequalities, you have to look at inclusion, because those are the secondary objectives that correspond to the policies that are pursued by the European Union. We might also argue, and I know that we will have that debate, that some of those points that I have just mentioned actually have an impact on our primary objective, which is price stability. The fact that, for instance, we do not calibrate and price those externalities as they should be, and there's a huge debate out there on the price of carbon and how carbon should be taxed and at what value and over what period of time. That question actually, I think, has a bearing on price stability. We are not passing judgment, we're not concluding that debate, we are opening it, and I'm sure that it will be rich, and I would be really interested to hear the views of those civil society representatives that know these topics so well. I know some of them are at the table because I know some of them. But let me just, Jackie, just one more second,
yes,
because I would like just to put this discussion in perspective. The last time we had a strategy review was back in 2003. 2003, probably 4 out of you, maybe 5, for those obviously who were born then, had a cell phone. None of you were transferring cash or buying things with your cell phone. It was a different time. Our economies were not as open within the European Union and within the euro area as they are now. So, as Philip just said earlier, the mandate does not really talk about outside things, the rest of the world, what impacts us. And it does impact us, it impacts us monumentally, because the euro area and Europe are economic zones that are vastly open to the rest of the world. So what happens in the rest of the world matters, number one. Number two, as I just mentioned, there are factors, there are issues that actually impact the work that we have to do that is defined by the treaty, which were not considered sufficiently at the time. Climate change was not, lingua franca in those days. Now, there are not many people who don't know what climate change is all about, if there are a few that challenge that we should all be concerned about it. So it's with this background of unbelievable changes that have taken place that I think that we should re-examine how we deliver on a mandate that is set by the treaty and that we are not proposing to change under this strategy review simply because we are mindful of what is feasible and what belongs to others. And that goes to the point that was made earlier on, actually, both for communication purposes and governance purposes. Everybody has to do what everybody's got to do. And it's not for us to infringe and substitute for what others should be doing, which is, by the way, the reason why both my predecessor and myself, and all of us actually, are arguing that fiscal players have to do what fiscal players have to do. And monetary players have to do what monetary players have to do. So with that, Jackie, over to you. I know there are questions, so I don't want to take more time.
Thank you. Thank you so much, President Lagarde. So let's turn to you now, and let me again throw some thoughts into the mix, some questions into the mix for you to consider. What are the global challenges that are most relevant to you and to the work that you're doing and the people you serve or represent? For example, how is climate change impacting on you and your organisation? Other issues? What specific concerns do you have in relation to these challenges? And has the COVID-19 pandemic in any way influenced or is affecting those concerns? And going to the heart of what the President was talking about there, what do you think the ECB should be concerned with when it sets its policies? Are there things it could be doing, bearing in mind what the President said about feasibility and everyone playing their specific role? But are there things it should be doing that it isn't within the scope of those responsibilities? How much attention should the ECB pay to all of these secondary objectives? Lots of questions out there. Once again, We're starting with an icebreaker, and I'm delighted to say that we have Luca Vicenti, General Secretary of the European Trade Union Confederation, who's going to kick off this session. Luca, great to have you with us, and a couple of minutes, if you would, please, to get us started. And then I see lots of hands are going up, inevitably from environmental NGOs, but please, let's hear from all of you. Let's hear from the social spectrum. Let's hear from young youth organizations. We haven't heard from you yet, and some of our other NGOs. But first of all, Luca, over to you, sir.
Thank you very much, Jackie. I hope you can hear me and see me. Very good. And thank you very much, of course, to Christine Lagarde and the ECB for launching this exercise that I think is very useful and also very timely happening. I think the major challenge that workers and companies as well, businesses are facing at the moment is, of course, the dramatic crisis and the high levels of unemployment that are coming from the pandemic. And they come on top, on the one side, to the climate and digital transition that we were already in, and on the other side of the stagnation and deflation in the economy that the ECB, of course, has tried to address in the last couple of years. To get out from this situation, we really need to pave the path for sustainable growth. It cannot be only a slogan. It has to be an economic policy that really benefits all and leaves no one behind. Christine Lagarde is absolutely right when she says that this is, first of all, the task of the fiscal actors, so-called fiscal actors, institutions, policymakers. They have to do their job. But at the same time, it's also true that the ECB can contribute to this kind of economic policy for people that can really benefit people. In this respect, as Christine Lagarde said, the secondary mandate of the ECB can allow the ECB to intervene in this respect, to support economic policy, a new and more sustainable economic policy. So the core element here is how the ECB can really fully exploit this secondary mandate. We think should do it in some fundamental areas. The first one is to support massive investment of member states in the European Union, while providing also tools for them to make their public debt sustainable. The second element is that this investment should lead to massive job creation, quality job creation, because the levels of unemployment we are going to face are increasing. The third element is that this investment should allow everybody to be accompanied in a so-called just transition process to be included positively in the climate and digital transformation. Another point is that we need to support upward wage convergence in the European Union, to tackle inequality and wage dumping, to balance export with internal demand, and to make our social market economy resilient and inclusive. And finally, we need to build a universal and inclusive social protection system at the European level that can really revamp our European social model. And I know how much Christine Lagarde concentrated on this when she was the director of the IMF. The ECB can and should do all this. It's really high time for the ECB to rethink, redesign, and implement the ways to fulfill its secondary mandate. And I think, to conclude, that these exercises to involve more and better civil society and social partners are absolutely essential to help the ECB to understand a bit better what's going on the ground, in the real economy, in the real society. Thank you very much.
Thank you very much indeed, Luca. And don't forget to lower your hand now. Thank you so much for those opening words. Just to say, ladies and gentlemen, I am seeing almost all of you putting your hands up in this session. So can I ask you please to be really strict about the couple of minutes rule so I can squeeze all of you in? And also just to say, I'm going to give priority in this round to those who didn't take the floor at all in the first round. And then hopefully in a second wave, I'll be able to take those of you who have already spoken once. My aim is to squeeze you all in on this topic as well. But let us turn first. Our first two are going to be Adam Pavlov and Henry Everston. So Adam Pavlov from Greenpeace, the floor is yours, sir. Adam, can you hear me?
I can hear you loud and clear.
I can hear Anne. Can you hear me? Over to you, sir.
Yeah, thank you. Good morning. Adam from Greenpeace. Many thanks for the chance to speak this morning. I would like to address briefly the issue of market neutrality. And this ties in very well, in fact, with the comments made by President Lagarde in her introduction. The climate crisis is the biggest market failure the world has ever seen. Sir Nicholas Stern pointed that out already 15 years ago. And that's the case because markets don't price climate risk in, and they over-allocate capital to industries that are driving the climate emergency. And as such, mirroring these markets essentially means reproducing this market failure. I'd like to point out, just yesterday, we published a report together with the New Economics Foundation and a number of universities where we highlighted the huge carbon bias that the market neutrality principle causes in the ECB's purchases of corporate bonds. Sectors, in fact, that contribute very little to either jobs or economic output in comparison to their representation in markets and indeed in ECB bond purchases. And I think, in fact, it's abundantly clear that pursuing market neutrality in the long run is going to make it impossible to achieve the secondary mandates, which President Lagarde referred to, but also the primary mandate. And as such, from our point of view, it's imperative that the ECB abandons this principle and, in fact, above and beyond that, aligns all aspects of monetary policy, the collateral framework, and prudential regulation with the fight against the climate crisis. Now, my question goes primarily to Mr. Lane. I think both Madame Lagarde and also Isabel Schnabel have called into question the principle of market neutrality. In fact, Isabel Schnabel went a step further and talked about the possibility of excluding certain bonds.
Briefly now, Adam.
I would like to ask Mr. Lane if he agrees with that. Thank you very much.
Thank you very much indeed. Thank you. Let us go now to Henry Everston, who is from the WWF European Policy Office. So, Henry, over to you.
Good morning.
You're very, very quiet, Henry.
Okay, is that better?
A little bit. You're going to have to shout a bit.
Okay, I'll do my best to shout. The main challenge for us, in our view, is climate change.
Can I just check something, Henry? Madam President, Mr. Lane, can you hear him?
Yes.
Yep. Okay. Fire away, Henry.
Is that better?
Much better. Thank you so much.
Much better. Very good.
Stop.
Very good. So, from WWF's perspective, climate change and environmental collapse are the main challenge that we face today. And these are made much worse, as noted already, by the carbon bias in the ECB's collateral framework and its asset purchases. So on the asset purchases, we know that 63% of the corporate QE program supports high carbon sectors. We also know that between March and May of this year, the ECB purchased almost 8 billion euros worth of assets from oil majors. Now, this creates an implicit subsidy because it improves these companies' financing conditions and makes it easier for them to damage the climate and environment even more so than they were already doing. On the collateral framework, we're encouraged by the fact that the ECB is now accepting sustainability-linked bonds as collateral, but we still consider that the ratings which determine which securities qualify still omit climate and environment risks. Now, there is some good news. There's good news. There is an EU tool which allows us to determine which activities are sustainable. And President Lagarde, you yourself have praised this tool called the EU Taxonomy of Sustainable Investments. You said it will be useful for the ECB to green its own operations, and many private financial institutions are already assessing their own alignment with the taxonomy. So I have 3 questions which I hope to hear your answer to. Will you green the ECB's asset purchases by aligning them with the EU taxonomy? If so, how will you do that? Will you use the taxonomy to review the ECB's collateral framework, particularly using the electric power criteria to exclude companies with high exposure to fossil fuels? And will you continue to advocate for an unsustainable taxonomy to do so? And finally, the Bank of England is partly reporting its alignment with the Paris Agreement from this year. So will the ECB similarly begin to report its taxonomy alignment? And will it report the taxonomy alignment of the European banking sector? So thank you very much for the opportunity to speak. I look forward to hearing your answers.
Thank you very much indeed, Henry. So I'm going to turn next to Jeroen Quackenbos from Oxfam and then to Sorcha Edwards. So let's go to Jeroen first. Jeroen.
Hi. Apologies for my background.
We can hear you, but we can't see you at the moment, so we don't know what you're apologising for.
Excellent. Well, now you can see.
Hang on.
I'm afraid of that.
There we go. That's fine. Don't worry, sir.
Right. So first of all, thanks very much for this discussion. I mean, in terms of the questions of how has the economy impacted or COVID impacted our ability to operate, it's a complete catastrophe. In the communities that we work with, lockdown means just as likely to die from starvation as to die from any kind of disease that might impact the areas where the communities that we are active in are really, really struggling to get by. I mean, I mostly just have a question, which is really, what can the ECB do for our partner countries? I mean, whenever we talk to ministers of finance from Ghana and from other countries, they are incredibly jealous of the financial firepower that communities like the European Union can effectively utilize to combat this crisis, which they are to a degree excluded from and have to go to the IMF cap in hand. Is there any way that we can transfer some of this huge amount of economic activity and wealth that we are pumping into our own economies, whether or not that's being transferred onward by the banks who are benefiting from it to the world's poorest countries, is a critical question for us at Oxfam, and we're looking at all potential avenues in order to try and mitigate some of the worst economic impacts of these crises. I mean, one area that we're really particularly interested in is the development of a stable token by the ECB for, a European digital currency, which could stabilize currency risk when it comes to direct cash transfers to poor communities. This is an area that we've had to look into expanding quite drastically as the more traditional ways of helping these communities is basically impossible due to lockdown measures, restrictions on travel, and then barriers to trade that have emerged in the interim. So just getting things to poor people is becoming more and more difficult. And then finally, I mean, on the climate issue, I agree with the previous speakers in that if you believe you can be climate neutral these days, you might as well be a member of a murder-suicide cult, in my personal opinion. But there are also other issues at stake. I mean, is there a way to discipline market actors who are not behaving with the best global interests right now, whether it comes to price stability or more broadly? And one example of this is European investment firms and banks that are still basically extracting wealth through debt servicing from the world's poorest countries, who are also benefiting from the subsidies that you are providing to these companies within Europe. Thank you very much.
Thank you very much indeed, Jeroen. And I gave you a little bit longer there because you're the only development NGO we have with us, but great to hear from you. Let me turn now to Sorcha Edwards. And Sorcha, I'm sorry, I don't have a note of your organisation. Please introduce yourself and over to you. Sorcha, can you hear me? We can't hear you. You may not have unmuted your microphone.
Now?
Now I can hear you, but I can't see you.
Okay.
If that becomes a problem, don't worry, just begin to talk and we will manage. And I gather, Sorcha, you're from Housing Europe, so a very warm welcome to you. Over to you.
Thank you very much. So we are representing the non-market housing, mainly in the European Union. So that is the social, public and cooperative housing providers. And we see that the lack of affordable and energy efficient housing is indeed one of the global challenges. We saw particularly the impact of COVID-19 when housing is indeed on the front line with the stay-at-home policies. What I would like to ask is from Housing Europe's perspective, from Housing Europe's side, is to ask how the European Central Bank is boosting investment in infrastructure and in particular social infrastructure, including obviously social housing. We're happy to see a shift with the latest report from the OECD level, with an increased valorization of large social housing systems as actual anchors of the housing markets, not only residual sectors which act as a band-aid on market failures to address homelessness, for instance. However, for many of our cities and our member states to build up that stock, with many of them at under 6%, up to what we would estimate would be appropriate to around 30%, it would really require much more flexibility on investment rules. So I would like to hear some feedback on that. Thank you very much.
Thank you very much indeed, Saoirse. I'm going to take one more in this round because I think that will then be everybody who hasn't spoken at all yet. And then I'll go back to the President and Mr. Lane to react to what they've heard so far. And then we'll take another round, giving the floor to those who have asked for it for a second time. So I'm now going to turn to Teresa Badia. We heard from Culture Action Europe earlier, but not from Teresa. So Teresa, good to have you with us as well. And over to you.
Okay, good morning. So thank you very much. Can you see me?
Yes. No, we can hear you beautifully. There we are. I can see you.
Okay, perfect. Thank you very much. So first, what Christine Lagarde already mentioned is culture it's a clear asset for the economy. So the economical ecosystem, the ecosystem of cultural and creative industries represents 4.2% of the EU GDP. So employment in the sector amounts 8.4 million people across the European Union. So additionally, cultural employment represents a significantly point of entry to the labor market for many young people. So in the very short term, and specifically in the cultural sector, COVID impact has been devastating. You know this. So theaters, concert halls, museums, everything is closed. So there's a serious liquidity issues and bankruptcies and job losses, especially for the many freelancers of the sector. So the whole cultural diversity is at stake. However, the cultural ecosystem, it's not simply and not just an industrial ecosystem. There is a work of non-profit organizations and independent artists and cultural workers, and there is sufficient quantitative and qualitative evidence on culture and the cultural impact on strengthening the communities, representing diversities as a crucial pillar of the European identity. We, beyond the well-documented contributions of changing economical landscape, culture can, and Robert Manchon was mentioning before, contribute also for well-being and education. So we hope, the second comment I want to leave here is we hope that the European Central Bank could integrate new perspectives and paradigms into its strategies. The present social and economical model, to put it bluntly, is completely broken. We think that in order to hold Europe together, the European project should be enhancing equality and secure social, economical, environmental, and cultural rights. So we need a paradigm shift, shifting to a sustainable new social and economical contract. So
very briefly now, Teresa, if you would.
Paradigm needs not only a European deal, yes. And my last comment is that we all not only need this European Green Deal, but also a European cultural deal, touching upon the very value of cultural actors in shaping this paradigm shift. And in this sense, my question, a very short one, is in the conference of the future of Europe will be a good opportunity to reflect on this, which will be the involvement of the European Central Bank in this conference.
Thank you, and sorry to hurry you to a close, but so many hands up, and I do want to squeeze everyone in, but great to hear from you. And can I just remind those who have already spoken, can you please lower your hands to make it a little simpler for us? I'm going to go back to the President and Mr. Lane, and then we'll take a second round. In the second round, I'll start with Bent Bonder, so please be standing by, Bent. Madam President, your reaction to what you've heard so far.
Thank you so much, Jackie, and thank you for all the questions that the previous speakers have mentioned. Thank you for the comments as well. I mean, they matter equally. It's not just a question of us being on the spot. It's also a question of absorbing what your concerns are. So the issues that were just mentioned about culture in particular and how that is taken into account is fundamental. On the issue of housing, that was the immediately such as question before that. It's very interesting that housing only comes in the discussion at this point in time, and I'll tell you why. Because we, together with Philippe and other members of the board and the Governing Council, we will be discussing how we measure price stability, how we measure prices, how we apprehend where consumers are actually spending their money. And there is one item which is not included in what we measure at the moment, and that is precisely housing. And we're hearing from other corners with which we have consulted so far that housing is something that we have to be mindful of simply because of the cost that it represents in a family's budget, in a household's budget, anywhere in the euro area. So I think this issue of housing is going to come back to haunt us in further deliberation on how we actually measure prices. And I wanted to mention that. Now, Jeroen, I will briefly discuss some of your points, and in a way, I'm carrying my previous hat of head of the IMF, and the IMF annual meetings have just been completed. There was a call by IMF and by other public institutions for the private sector, meaning banks and financial sector in general, it's not just banks, to actually participate in the DSSI, which was the postponement of poor countries' obligation to repay their debt. Most countries are embarking on that project. There has been an agreement at the G20 level, if I recall, to actually give an extra 6 months deferment. And I believe that China is embarking on discussing together with Paris Club rules how it is also going to participate in the process of deferring debt. But private sector actors are very few, if any, participating in that discussion. And I think that you call for all to participate in trying to alleviate the burden on poor countries is particularly well taken at this point. On the issue of digital euro, which is a little bit outside the strategy review, but not completely, because it's a project that we will decide upon later in January once we've finished the consultation process that is underway at the moment. Clearly, that will have an impact on the issue of remittance that you pointed to, because if transfer costs can be significantly reduced thanks to digital uses and through good cross-border payments that have to come together with a digital central bank currency, then certainly that would help. Now, I'm not under the illusion that it's going to happen right away. Let's face it, because a digital currency is going to take time to make sure that we master all the technicalities, all the pitfalls and the traps that we might find in the process. So let's not count our chicken too early, but I do believe that there is hope in the combination of a good cross-border payment, more efficient, faster, cheaper, and digital currency. So we will carry on that page. Now, turning to the questions that were asked by Adam and Henry, and I don't want to mix the two of you. You have your respective territory. I share with you, and I think that many of us are sharing with you, the priority of dealing with the catastrophic potential outcome of not paying attention to climate change as we should. So, as I said in my introduction, we will be putting that on the table. There is a conference that has been organized. There will be a special seminar dedicated to climate change and how we take it into account in our monetary policy. I think we should equally understand that a man's got to do what a man's got to do, as you would say. And it is not for a central bank to actually provide the ratings or the rankings. And that's the reason I was particularly pleased to see that the European Parliament came together to align behind a taxonomy, which, as you two and many others working in your organizations are following those themes, are perfectly aware. Because we roughly understand what is green, we don't so well understand what is less green. And I think in that respect, the taxonomy needs to be continuously improved, number one. Number two, as you well know, the taxonomy is going to come into effect in 2022. So it's not as if we had an off-the-shelf perfect instrument that we can use in order to filter through collaterals that we take or purchases that we make. And on that page of the purchases that we make, one should not assume that of the massive asset purchase programs, including the pandemic emergency program, we buy non-fossil according to a market neutrality principle on all of that. We predominantly buy sovereign bonds. We predominantly buy European agencies' bonds. And then there is, I don't know exactly the percentage, but it's roughly 20% of our asset purchase programs, which is spent on private sector, it's the corporate sector purchase program, and there's a portion of our pandemic emergency purchase program, which is also dedicated to commercial paper and to corporate bonds. So let's just, make sure that, number one, we agree on the facts. Then we have the right tools, and then hopefully we can convince all those who challenge it or who don't see it as clearly in the mandate of the central bank, that actually taking that on board is part of our duty, because it impacts on price stability, number one. Number two, it's an issue of good risk management, because if the market is deficient in pricing risks, then should we just follow the markets when it is wrong, or should we not? Once the tools and the ranking and the ratings are fixed by those who have to fix it, then apply it to correct eventually the market failures. And I think these are the terms of the debate that we will embark upon. I would like to thank Greenpeace that has actually produced, together with universities and other institutions, that report. And it's very helpful to actually have that on the table for discussion purposes, including for those who are not necessarily convinced, as I am. And as Philip will tell you whether he is or not, because it's his prerogative to answer the first question that was put to him, Jackie. I think there was a question.
Indeed it was. Mr. Lane, if you could pick up on that and any others, but briefly if you would, because lots of hands still up and we haven't got that long.
Sure. So on market neutrality, I suppose day one of any economics degree will bring up this externality point. So I'm pretty sure when the market neutrality principle was written, maybe the looming size of this externality was not so present. I've written before when I was the Governor of the Central Bank of Ireland about the long agenda implied by climate change for the financial system and for central banks. Let me emphasise, however, that probably I'm hoping that the bigger challenge for us in relation to climate change is the carbon transition. That essentially, we are seeing every year more and more governments making a step forward in terms of carbon pricing, emission standards, public investment in retrofitting and so on. All of those have very large structural change implications for the economy and for prices. So, I think over and above saying, well, the market is failing, how should the central bank recognise that? Our range of perspectives on climate change are very much preparing for the carbon transition. How does that have implications for how investment will behave, how the labour market will behave? Because it's well known that the green transition is also a huge opportunity. It's a huge opportunity to fix one of the problems I highlighted earlier on, which is weak investment, a lack of vigour in the economy. So I think we should have a very broad and perspective on that. And maybe the other point, just before you go back, is earlier on people were saying monetary policy is a very blunt instrument. Another way to say it in a similar way is it's very pervasive. Low interest rates show up and affect a lot of different areas. So the issue about social housing, the low interest rate environment in terms of facilitating whether public investment or social investment in housing should be recognised, in addition to the implications of low interest rates, of course, for house prices. And also maybe going back to the Oxfam issue, of course, we would be very aware that so much of Africa is tied to the euro because of the historical links in terms of the way the various zones in Africa are linked to the euro. So when we have low interest rates in Europe, it does, with a lot of modification admittedly, but it does spill over. It does support financing conditions in those parts of Africa as well. And of course, this again provides an example where we have said repeatedly, especially under these conditions, one way our monetary policy works is by enabling fiscal policy to do what it needs to do. And of course, in relation to fiscal policy, Europe in general has a commitment to also supporting through overseas aid and other mechanisms, especially the low-income countries in Africa and elsewhere.
Okay. Thank you very much indeed. Thank you. Let's take our final round of comments today. And as the President was emphasising, we still want to hear your views, not just your questions, but also your views. Could I just say to Bent Nopi Bonda, you did have your hand up earlier. I wanted to give you the floor because you haven't spoken yet, but you've disappeared from my hands up list. So if you still want to speak, could you put your hand back up and we will give you the floor shortly. But let's go now to some people who we heard from before, but on a previous topic. So let me first this time turn to Guillaume Prache from Better Finance. Guillaume, you have the floor again, sir.
Thank you very much. Very shortly on secondary objectives, which is one of the just debated points. Do you hear me?
I hear you beautifully.
Good. The ECB should definitely, and I will be very short, help internalize the critical externalities that are not priced by markets, and this has been rightly pointed out by Greenpeace as well, in particular environmental externalities. And we propose to request the beneficiaries, the private banks and the EU governments of the, as I said before, the de facto subsidies of the ECB, which is the negative interest that the ECB is paying on its loans to private banks and on government bond purchases, to allocate a minimum percentage of these subsidies to support activities that improve the ESG issues and hold these beneficiaries accountable with reporting on key improvement indicators, because citizens want real results and impacts, not greenwashing. And in this regard, we agree with Mrs. Lagarde that taxonomy needs to be continuously improved. And again, EU citizens have a right to clearly know the total amounts of these huge subsidies and by beneficiary, by each private bank that gets them, by each member state that gets them. Thank you.
Thank you very much indeed. And I see that Bent Nopi Bonda, who is from European People's Forum, has now re-raised his hand. So Bent, over to you, sir, if you can activate your mic and your camera. Can you hear me, Bent? Or do we have an issue?
Me.
Yes.
Okay.
Hello there, sir.
Thank you very much for inviting me to speak on behalf of Europe's People's Forum. It is I understand very much President Lagarde's challenges in defining the secondary objectives and mandates of the ECB. And I think that the citizens could play an important role in prioritizing some of the goals in your work. You say very rightly that the goals of ECB must be shared by the citizens that you serve. And if you look at the possibilities we are a network of 150 organizations, of which 27 are professional technical associations that work with listening to the citizens, both at local, national, European, and international level. We think there is a lot of issues that could be reflected with the citizens. It could be, as you know, globalization, equality and full employment. It could be economic growth and climate. It could be dilemmas on financial policies between Europe's rich and poor countries. And it could be, of course, what do we do with the health? What about the economic recovery? Where ECB could play an important role as a neutral and independent facilitator and supporter to rest of the European organizations. I think maybe that would be a very good idea and a help for you.
Thank you, Bent, and thank you. Very good to hear from you. I'm seeing we have about 10 minutes left, and I've got 4 or 5 hands up. So I'm going to ask everyone, please, 90 seconds or so I have a chance then to come back to the President and to Mr. Lane to respond. And of the names I have so far, just so you're ready, I'm going to take Martin Smaltried, then Roger Casale, Stanislas Jordan, and Wolfgang Kuhn. And then if there are any other last ones, we'll try and squeeze them in. But let us go first to Martin. Martin Smaltried, just to remind you, from the Confederation of Family Organizations in the EU.
So my question is going to be a bit provocative. I mean, we've heard from Christine Lagarde and Philippe Lane. They mentioned the constraints of the ECB's action due to treaties, which are very hard to amend, and being realistic about what can be achieved in this ECB strategic review. And we all know this is not completely true, of course. It's only true now because the economic and financial indicators you're looking at gives you confidence that you have the situation under control. But we all know how creative the ECB and various governments got during the height of the 2008 financial crisis. In fact, most governments are now in violation of the Maastricht Treaty in terms of the level of their public debt. And so where are the treaty enforcers? Desperate times call for desperate measures, as the saying goes. So what I hear from you is times are not desperate enough to consider certain ideas or policies. So my question is very simple. What would it take for you to change your discourse and be open to certain ideas and policies which are, for the moment, off the table? Another third wave, another confinement, unemployment rising to 25%. What would it take for you to change your mind? Thank you.
Thank you very much. Roger Casale from New Europeans. Roger, over to you again, sir. If you can put your mic and your camera on, we'd love to see you as well as hear you.
Thank you very much. There's an opportunity in the crisis. The opportunity is to really step up the dialogue with citizens, civil society, and cities. That's the key. Democratizing the key decision making is the key to sustainability and resilience, which is our key challenge. On the 3 questions raised, climate change, very important from our perspective. We're working with an organisation promoting a European citizens initiative calling for stop global warming through carbon tax. We're very interested to know the impact of that on potentially on price stability. And it's a good example of how the ECB is reacting to citizens even before we reach the 1 million signature mark. Another issue that has not been raised, well, has been raised, and we would like to raise very much, is the issue of universal basic income. We're doing a lot of work on that with partner organisations. What would the impact of the introduction of universal basic income, the popularity of which has gone up hugely through the pandemic, on price stability? Is that something that you're looking at in terms of secondary mandates? And finally, in terms of how to take forward the conversation, what is the ECB's involvement going to be, if any, in the conference on the future of Europe? And can I also mention Europe Future Fringe, which New Europeans are involved in, which is a parallel event to the Future of Europe conference, in particular reaching out to cultural organisations to energise the debate about the Future of Europe conference, the Future of Europe, and also the key thing about civil society organisations. And let's remember, we're all talking about the heroes of the pandemic, people on the front line of fighting the pandemic. They were heroes before the pandemic, they'll be heroes after it, and they need support. And how can we learn from how dependent we are on people who are often in very precarious situations or have no income at all, but have been helping to keep life going through the pandemic, and who we need to support going forward. Thank you.
Thank you very much indeed, Roger. Let us turn to Stanislas Jordan from Positive Money Europe. Stanislas, if you could open your mic and your camera again. Over to you.
Yes, thank you. Thank you again for giving me the opportunity to speak. So I'd like to pick up on the point on the secondary objectives again, I think, which is a really important one. So we have to recognize that the treaty says the ECB should support, without prejudice to price stability, the ECB should support secondary objectives of the ECB as defined in the treaty article number 3 of TEU. So I think most of us, if not everyone, would agree that climate change is currently a tremendously big challenge, and that might be, that could be the biggest objective that is mentioned in the treaty. But it's also true that from a very legalistic perspective, people might agree, yes, but you have different objectives in the EU, and climate change is only one of them, and there may be trade-offs with other objectives that this treaty mentions as potential secondary objectives of the ECB. So I'd like to ask questions to Madame Lagarde. So in your view, is the current formulation good enough? Is it specific enough for the ECB to intervene on those secondary objectives? Or Are there too many trade-offs and hesitations? And if that's the case, then would it be useful for the ECB if, for example, if the European Parliament would come up with a clear list of priorities among those many possible objectives? And would that help the ECB making decisions and move more forcefully if there was more specific and prioritized objectives for the secondary mandate of the ECB, and obviously without prejudice to price stability? Thank you very much.
Thank you very much indeed. And the last person with a hand raised, Wolfgang Kuhn from Share Action. Wolfgang, good to hear from you again. If you can activate your mic and camera so we can see you for a last time.
Yes, thank you. President Lagarde, I was surprised to hear you insist that the primary objective of the ECB couldn't be changed, because that implies that you think and I'm not saying you do, but it implies that to me, that the challenges that we're talking about, the systemic challenges, are somewhat not directly relevant to price stability. And I would insist that they are, because prices surely are a relationship between monetary units and units of goods and services. And even if the monetary unit goes down, if the quality of the good or service goes down further, then that's not deflation, that is inflation. Let me give you an example of what I mean. If Eurostat tells us that packaged holidays prices are flat or going down, but your holidays are no longer of any quality because there's no snow in the mountains, the beaches are polluted, you can't even get to the beaches because some mosquito or other pandemic might kill you, how is that not directly a matter of price stability? Thank you very much for listening.
Thank you very much, Wolfgang. So, Madam President, your reaction to what you heard in that round?
Great points, great debates, and thank you really again so much to all of you. I won't repeat the thanks because it's maybe overdone, but I really mean it, because some of the points that you raise, intuitively we can tell, we can feel that they're there, but to hear you articulate them and indicate what your views are is really helpful. I would pick up on a few, and then I will turn over all the difficult ones to Philip, because he's the chief economist. One is on the last one that Wolfgang you put to me. I think you sort of recapped points that I had tried to make in my introduction. In other words, I think there are two avenues through which matters such as polluted beach, lack of snow in the mountains, abundant mosquitoes, and disappearance of bees can be addressed. The first one is through price stability, by establishing very clearly what externalities are not taken into account by the price determination, number one. It's not going to be an easy game in town, but it's something that we have to address. And the second avenue is that of risk management, where if markets principles are failing in order to actually assess the real value over the course of time, then we need to consider it and see how we can address it. And that gives me a chance, by the way, to mention something that I forgot to mention, which is something that we are already doing in relation to that. The SSM, which is, as you know, the supervision arm of the ECB, takes some of these matters very much into account. And it recently conducted a vulnerability exercise in which it assessed how financial institutions, in particular banks, are actually considering and factoring into their own risk management climate change issues. And I think the result speaks for itself. There's a lot of work to be done. In the same vein, the ESRB, which is the systemic risk management operations that was set up at the time, is also conducting a climate change stress test exercise, which should be delivered in the first half of 21, which will, I think, also will be helpful in order to help other institutions to assess how they deal with climate change risks. The role of citizens at local level, thank you very much. I think it was Bernd who raised that issue. This is precisely what we hope to reach out to and receive from, And I know that as I mentioned, other national central banks in the 19 member states around Europe are also reaching out and are also trying to, in local languages, because obviously I could not possibly communicate in all local languages, which is how people express themselves best. I couldn't do it, and nor could Philip. And it's good that national central banks that are part of the Euro system actually do that too. What would it take for us to change our mind? I really like your question, but in a way it's not an issue of changing our mind. We are operating with a mandate. We have to deliver a service to European citizens. We've been appointed to do that. What I think we are exploring is the space, the room to maneuver, the avenues that will be conducive to delivering on our mandate in the best possible way and taking into account all the challenges that are out there. As I said earlier, a man's got to do what a man's got to do. I cannot substitute for all the fiscal authorities of this world. I cannot substitute for the European Parliament to do its job. And I cannot substitute for the democratic principles that operate within 19 countries that are member states of the euro area to do their job. We will do our job as best as we can, including all the challenges and all this new paradigm within which we operate, and hopefully with a focus on being greener, on being more digital, on being more inclusive, and on being mindful of all Europeans. That's what drives me and wakes me up in the morning.
Thank you very much. Thank you so much. Mr. Lane, your thoughts, and then we are coming towards the end, but I just want to look forward again before we close this session. But Mr. Lane, your reaction to the questions and comments we heard in that round.
So let me go back to a point I made earlier on, which is the treaty is extremely general. So and the definition of price stability, as the President mentioned earlier on, was basically left open to us to kind of convert into something that we can operate. So let me, for example, emphasize, even though we spend our time focusing on a particular definition of the price level, of course we look at many other indicators. So, for example, for the wider economy and for households in Europe, there are a lot of activities they care a lot about which do have prices which are not in the consumer price index, if you like. So the price of public services is one basic example. The price of investment goods, buying a home, renovating, and so on. And also, it's very relevant, as we've talked about today, the missing prices, the prices of goods that are destroyed, not produced, and all of those market failures. So I think you should have the reassurance we do have a very wide spectrum. But then I suppose the tricky question is, how does that necessarily lead to a change of policy? Is it the case that our policy should be basically general, blunt, pervasive? Or I think a lot of discussion, not just on this call, but day by day, is whether the ECB should also have more surgical policies to tackle particular issues. And those are big questions, and this is one reason why we're very much in listening mode. I mean, I should say, we're only giving you very high-level answers right now, but everything you've said, the review will be taken on board. The very dedicated staff we have will be following up and trying to think about all of the points you've raised so far.
Thank you very much indeed. We are almost out of time, but as I say, I just wanted to remind ourselves a little bit of what will happen next. But before I do that, President Lagarde, you've already made it clear how valuable you have found the contributions that you've heard today, both those that were put in the form of questions and the comments. But did you find anything particularly surprising or striking? What for you do you take away from this? And did the event fully meet your expectations?
So we do our own rating here. Yes, it did meet my expectations because we heard non-conventional questions, ones that are not necessarily discussed around the table in depth, and that will, as Philippe just mentioned, give a chance to staff that is actually listening to all those questions that you've raised and comments that you made. It will give them a chance to, think it over and think it twice and look into areas of research that would be interesting in response to some of those questions that you put. And I think it certainly reinforces, for my own sake, the fact that in addition to the sort of narrow angle from which we have historically looked at monetary policy over the course of previous decades, we need to enlarge the horizon and be courageous in tackling some of those issues, although they're not the traditional areas that monetary economists would look at. Not that they don't want to look at them, because they are just as many of us human beings concerned about the future of their children and about the some of the externalities that we discussed earlier, but it's not necessarily, the core business that they're used to. So I think it's our duty to open that box a bit more.
Thank you very much. Philip Lane, before I come to you, Luca Vincenti from the ETUC wanted to dive back in. Luca, I'm going to insist it's a 30-second intervention because we are almost out of time, but you clearly had something burning you wanted to add. So please, if you could open your mic and camera, let's hear from you.
Yeah, it was just a question because I've heard a lot about environment, rightly so when it comes to the secondary mandate, but I didn't hear any reaction on topics like employment, wages, and social protection. So I wanted to ask Christine Lagarde if she could comment briefly about that.
Okay, thank you very much. Madam President, I don't know whether you want to come back in on that point.
Luca, thank you so much. Nice to see you first. But of course, job creation, employment, participation, the fight against unemployment is part and parcel of what we are thriving to achieve. We're doing it through the angle of price stability, and Philippe has been eloquent in identifying how trying to reach that inflation goal that we have actually has ramification for wage negotiations. And this is clearly on our mind, and very much so, because while climate is an imperative, people are the goal.
Thank you very much indeed. Philip Lane, before we close, can I also get your reaction to today's event? Did it meet your expectations as well? Have you found it as useful and valuable as the President says she has? And can you just remind us what happens next?
So I think maybe for me, the unique role of this event is the fact so many different groups spoke up. Because, I think it's important. We have to reconcile, we have to bridge, we have to take into account a very wide range of perspectives. But that's just reflecting the reality. Monetary policy affects all sectors of the economy. It affects all different categories of individuals, workers, those who are retired, children, all sorts. So the diversity of views today, I think, is very important. And then in terms of follow-up, we do have a structured approach to this review, and all of these views will be studied by the staff. We have a lot of work streams. You can see the work streams on the internet. We're going to have a lot of seminars, dedicated seminars on employment, on climate change, and so on. So I think it's been very valuable, but I suppose I would also re-emphasize to all of you who've participated, do not be shy. Send the ECB, if you have documents, if you have emails, personal views. We have a lot of capacity to absorb and pay attention. So do not view this as a one-off, your time is up, but please continue to follow up, and I'm very happy to engage. And of course, today with this, I think it's worked reasonably well with the web internet, but hopefully one day we can do this in a more personal setting.
Absolutely. As Vera Lynn used to sing, we'll meet again, and hopefully we will one day. It only remains for me to add my thanks. Just a reminder to those of you watching via the live web stream that you can have your say via the ECB Listens portal on the ECB website. You'll see the link come up at the end of this session. Thank you so much President Lagarde, Mr. Lane, for your openness, your frankness. Thank you to you and the Executive Board for organising this ECB Listens. But most of all, I'd like to thank all of you from civil society for your comments, for your questions, for your marvellous self-discipline in sticking to the time limits. I know it's hard when you have so much to say and feel so passionately about it. You did it brilliantly, which meant that I met my mandate, my primary objective, which was that everybody who wanted to speak spoke. And that's thanks to all of you. So keep those comments and contributions to this discussion coming. Thank you all very much again. And it only remains for me to wish you a very pleasant rest of the day. Stay safe and goodbye.